Good Monday morning, Market Chameleons, and thanks everyone who is joining us for the first time. Welcome to the Market Chameleon pre-market show with myself, Will McBride, and the main man, Dimitri Pargamonik. How you doing, Dean?
Good morning, Will. How are you?
Good. You want to start with the disclaimer? It's up for everyone to see.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor or your broker. That's what they're there for, to help give you guidance and to provide you with the advice. But there's the disclaimer. And with that, let me share my screen. And today, once again, if you guys are joining us for the first time, we're open to questions. If you guys have any questions regarding Market Chameleon tools, data, analytics, strategies, you want to come on a show and share something you've been doing that's been working for you, or you want to share an experience that you've had that something unusual happened, you want to bring it to our attention, that would be great because that benefits the entire community. So a couple ways to ask those questions. You can put your questions in the live chat on YouTube. Will's monitoring them. He'll read it back to me. We also put in a link to Zoom. If you click on that link, it takes you over to Zoom. You could raise your hand. You could ask your question directly. You don't have to turn on your video, but we'll be able to hear your question. You can guide us to what you're looking at. So those are the two ways you could come over and ask the questions. And again, we really appreciate those questions because it's going to bring something to our attention that other people may also have the same question or they didn't think about. So while we're waiting for any questions to queue up, I'll just start on the pre-market report, take a look at stocks that are trading in pre-market hours, what's moving. Maybe we'll take a look at a couple other reports just to get some insights. So let me know if you have any questions.
Sounds good, D.
All right. And this is the pre-market report, and these are stocks that are trading in the pre-market hours. So we're here in the pre-market report under stocks menu. And we got the most active stocks. We got a list of our biggest percentage gainers, our list of biggest percentage decliners. Right now I see 67 stocks made our percentage gainers list, 134 in the decliners list. So from this perspective, it looks like we're setting up for more of a bearish bias at the open. Let's take a look at the S&P 500 stocks to see if we see a different situation there. And I'm going to use the filters here above, which controls this list. I'm going to drop this down and select an ETF. By picking one of these ETFs, this list will filter by the holdings in that ETF. So I'm selecting SPY, that's the S&P 500 ETF, and I see 10 made the percentage gainers list, 19 on the percentage decliners list. So again, looks like we're setting up for more bearish bias at the open. And, we've been talking about it. Markets have been volatile, really driven by headline news coming out of Europe and the war in, Ukraine, Russia, a couple other things now that I think are also starting to make the news. The deal with Iran looks like that, because Russians involved with that might not be going as well as previously thought. And now China, what is China going to do, right? And China is probably the bigger risk, much more impactful on the global economy. So paying attention. I think even China might be more interesting now coming out, because there are now a lot of things happening there. And I'm starting to read that they might even potentially delist some of these Chinese companies, some of these big Chinese companies from the U.S. markets. Have you been reading that, Will?
Yeah, I mean, it's amazing the changes that have taken place the last 3 weeks. So many items, you think rules and laws exist that would prevent things from happening. And, have you read anything about what's going on in the London Metals Exchange with the copper trades?
No.
people had copper trades that took place, and they're saying it didn't take place.
Oh,
So you
really?
have $3.9 billion worth of transactions on that last day that they're wiping clear, like they didn't happen.
Wow. Yeah,
So
and it's a problem because people use them to hedge, and they thought they were hedged potentially, and if they think that, they're doing something else on the other side, right? So a lot of these traders, even in the stocks, or options, it sets off a different trade, right? So when you put on one trade, let's say in an option, you think you have a trade on, you're going to go and hedge it with a different option or stock. But if they take one side off, and I'm sure that could be happening to metals, then you're left with this exposed position that you have to liquidate. But yeah, like some of the news coming out, especially, I don't think I've ever seen where stocks just got delisted like that from a country, and I think a lot of it has to do with that the SEC feels that they're not sharing information with the SEC that they're supposed to. They're not opening up their books like they're supposed to, and they might not be able to because now you have the conflicting rules in China and in America, and they might get delisted. So what happens then if they get delisted? The question is, what is the paper that people are holding? What is it worth? What are your rights? So those are concerns, and we've seen a lot of Chinese companies right now getting hit. They look attractive, but then again, you got this risk going on.
And it's a huge risk, right?
Yeah, very big. What are some of the big names? Like, I guess Alibaba, continues to go down. Like you see, it's just continuously, and I can't tell you how many times, I've read Alibaba is such a great steal. It's you got to buy it, and it continues to, go down, down, and down. I think, like, what is that, Baidu? Or what is the Baidu? What's that symbol?
BIDU, I think.
BIDU.
Yeah.
So you're down, that's going, which is an interesting. I think Baidu is actually working on like smart cars, right? The technology behind like driverless cars. So that's one, but you could see just people are starting to really think like, hey, that might happen. We might see these stocks get delisted. And I don't know what happened. I've never seen that before. Not like wholesale delisting of, stocks that are from, a region. I've seen like an issue with a particular company, but not this way. And then what does that mean, right?
And I hate to bring systemic risk up, but what's this mean to all the banks and their holdings and their swaps? If you have,
related products,
two entire markets have been drastically changed, and it's going to affect how you price anything that's been listed, right? Any overseas companies that are listed as ADRs, it's put the whole market at, in an unknown.
It starts to be right. That's the first time we've kind of seen that type of risk starting to really, that I could recall. I don't remember seeing that type of a risk where the companies can be delisted and you can't trade them in America. So so that's one thing to look out. And I think that the volatility, besides the war, the inflation right now is still top of minds. And if you look at inflation right now, they're going to probably start raising interest rates coming up right now, and we'll see what they say. But I don't know if raising interest rates at this point is gonna make inflation, is going to be an effective tool, because now what are we seeing is that we've got supply issues, right? It's not going to increase supply. It's not going to increase the supply of oil, gas, food, all these shortages are starting to pop up, and we're discussing it. Well, their solution right now is to try to create a recession to control inflation, and then we're going into a stagflation environment. And I think people are starting to do research with the impact of Russia and China, and even out of Russia. I think when we talk about oil prices, it's not just like what you're putting into your car. I think like over 6,000 household products use oil in their production, from lipstick to I don't know, dishwashing fluid to, making tires and all this stuff. It's an input into that production. So something to think about, because and I'm surprised how the market has held up given all these uncertainties. I'm just going to take a look at SPY real quick while we're waiting for any questions to come up. But just to compare SPY, here's a 1-year chart. And I think for the 1 year, it's still up. It's up a decent amount, but let's compare it to like tech heavy QQQ. And I'm going to compare it to like the Russell 2000. So, high growth stocks. And here we go from a year, we could see these are the percentage change on the year. And I'm going to come back all the way down here to the end. So you see SPY on a 1-year basis up 6.7%, holding on to gains. And a lot of it could be because of the energy sector. I think that's up like 40%. We'll take a look. Tech heavy QQQ still up 2%, not as good as well as the SPY, but still up. And then you could see here the Russell down 15%. And that's how we're looking now. So the higher cap stocks, S&P 500, more diversified for sure, because you got all these sectors, and some of them, especially like in the energy or maybe defensive, are doing pretty well. QQQ up 2%, and there we've seen that. And let me see if I could put this Kathy Wood. What is it? ARKK.
Yep.
So you could see her down 53%, and I think that could be more ARKK probably more representative of where I think a lot of retail traders were going into those types of stocks, because they were high flying for a while, right? And when you're looking at a 50% haircut, that hurts. That's like definitely bear market in that section, the high growth stocks, high PE stocks. So just doing a quick comparison here, when you see that 53%, that's a huge hit. Do you have any questions, Will, so far?
Nothing's popped up, D.
Okay. Let me take a look at the implied vols here. And here's, we kind of started here just taking a look at the different industries and how they're doing compared to each other. And here we see that, there's that energy sector in 6 months up 60%. So that's doing one of the things that are offsetting some of the bigger losers, right? 23% in the consumer communication services, utilities, on a relative basis, they're not doing too bad, up 2.9% in the last 6 months. Everywhere else, we're seeing hits. And besides the communication services, technology sector down 8%. I think the technology sector also has a few things there that are going to drag them. Besides higher interest rates, what we've been seeing now is a push towards data sharing and data capture and privacy. And we've seen, moves in Europe that I think we'll see here in America. And that's going to directly impact their business model. And I also think now there's an increased risk of cyber attacks, right? You got these big tech companies like, Facebook, Google, all these, I think they're big targets. And they've actually, there are already firms out there that have created software that could get in there without them even being detected, right? I think, what was that one software, Pegasus, that comes in there, gets into people's phones. They don't even realize it's in there. They didn't open anything. They didn't download anything. It gets on your phone. And once it's in there, it knows everything you're doing, right? It knows, gets access to your camera, gets access to your phone calls, to your texts, to your emails, anything you're doing on there, your location. It's in there. And I think that these companies looked at it and said it's like one of the most sophisticated softwares. And I don't know if they even have an answer for that. So they're going to be, a lot of costs are going to be trying to protect themselves from the cyber attacks and malware. So just coming up, wanted to mention that coming up here, we see the implied vols here. And this is the implied vol S&P 500 SPY, and then for each sector. So these are the IV30. And over here, we could see the range. This is 52-week low, 52-week high. And here we see the IV ranks. So the IV rank, it just takes the most recent implied volatility and it compares it to the previous 252 days and closing IV levels, and then tells this IV rank says what percentage of the last 252 days did the implied volatility close lower than the most recent. So you could see all of them are elevated in the high 90s, right? So they backed off a little bit on Friday, but still pretty high up there. And this graph over here, it shows you the low and the high for the year and the range, right? So this little dot tells you where it is right now relative to the previous 252 days, right? So if it could go above there, that means that the most recent level is higher than the last 252 days. So those are how you could read it graphically. And here's the chart over here. So I guess, Will, if there are no questions popping in, and everybody's good, I might just stop right there.
Yeah, no questions. Rob Black just said, I heard one airline expert say that ticket pricing could rise 7% monthly, at least for some time to come.
Yeah, and I think that, and what's happening is now, because people are closing off their airspace, right, in Europe and in Russia, that some of these airlines, they're having trouble. They're increasing the length of time it takes you to get from one point to the other, right? Because they have to fly around closed areas, So I don't know how that works, but depending where you're flying to, Russia's closing off their airspace to certain airlines. Europe is closing it off, and that's also adding to the cost. And of course, the oil tickets. We're going to see a lot of pressure on inflation like we haven't seen in a long time. And the question is, where are the deflationary pressures right now? There's nothing that big that we could point to. There's, unless you could think of, Will, but I can't think of anything that's creating enough deflationary pressures to offset what we're seeing today.
Yeah, no, I can't either. I'm wondering, is there a place where someone could look and say how this, and we were talking about the ETFs, but the silver iShares Trust has performed versus other commodities?
So yeah, I'll take a look. So this is the SLV.
Yep.
And one of the things, I think we mentioned this last week. So you could go here under charts and just compare, let's say, to gold, the GLD ETF. But these ETFs, that the silver, gold, you have to take a look at how they try to track an index, and how are they rolling futures? Are they holding, the actual gold or the actual silver? What are the costs that they're incurring for holding it? Where are they storing it? So it's important just to pay attention how they're trying to track their target index, because it will make a difference. Sometimes you're going to see things that are just have a very negative drag on it because of the cost of the way they track it. If you're rolling futures and you have the contango risk, where you're buying a future that's more expensive or selling a future less expensive, and you keep rolling it that way, and that's a cost, right? Because you're renting it. If you're holding the physical commodity, how are you holding it? What are your expenses? Like, where are you storing it? So a lot of it is important. But here you could just take a look at the ETFs. So this is SLV versus GLD. So we could see here they're pretty close, at least on a 1-year basis. Here they diverged. So it looks like gold started to diverge from the silver, and then they caught up to each other. So that's at least the ETFs, GLD ETF versus SLE.
Well, there you go. Thank you, Dima. It was helpful.
All right. All right. So I guess no questions. I might just leave it there.
Yeah, actually, Mike McCrae is saying actual inflation rate is around 16% if they use the 1982 formula. It has changed in recent years by the government to give the perception of lower inflation. Thanks for that wonderful news, Michael McCrae. We'll leave on that. Everyone, certainly, it feels like there's inflation everywhere. And anything I go to buy seems higher than it was last month.
Right.
The gas prices are the most shocking, but
yeah, inflation is destabilizing, right? It's going to impact the people. It's very taxing, right? It's taxing when it's taxing on food, transportation, shelter. It's a destabilizing factor. Right? You have to somehow get it under control. And I think right now, the way they're signaling, and you were saying this well, is they're going to try to create a soft landing and force a recession from an overheated economy in the U.S. So they're going to slowly try to create a recession. Is that what you're hearing?
That's the only thing I can imagine that's going to work itself out. Is they're going to have to slowly, raise rates and slow this, growth in this inflation, pull in money supply, start buying bonds. I mean, they're going to have to do a lot of things, and it's probably going to be more dramatic than.
It might be more dramatic than yeah. If they're preparing us for a soft landing, they're kind of signaling to us that the economy is they're planning to slow down the economy, right? With higher interest rates, whatever other tools, but they are signaling that, at least for now.
Listen, we only got a couple minutes left, so I think a question did just appear. It's a person who has been on for the first time, Femi, today, and they were asking, how do you apply IV to option trading and when to use it? Maybe that's something we can talk about tomorrow. Start tomorrow's show with that.
Yeah, we could maybe talk about it more than tomorrow, but IV is just telling you the general level of implied volatility, right, where you are right now, relative to the last 200. So it's a benchmark, right? It's a benchmark that you use to make a quicker assessment, right? So it's an IV level is not a signal to do something. Just like if you say, food prices are at 40-year high, it's not a signal to go do something. It's letting by benchmarking where we're at, how high implied volatility is or how low it is. And that's just part of your overall assessment.
All right, perfect. Well, maybe we'll dig deeper into it tomorrow. Thanks for the question. Thanks for coming out today, everyone. Dima, great job. For those who are unaware, tomorrow evening is Raj's monthly webinar. So I'll put a link into the chat for that. Make sure you register for that, though you will get emails tomorrow when it goes live. Dima, great job, my friend.
Great. Thanks, everyone, for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade in peace, chameleons. Bye.
Bye.